Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining us for this segment, we have Mona Mahajan, Senior Investment Strategist with Edward Jones, to discuss a recent survey from Edward Jones and Morning Consult that reviews how investors view the market and their financial priorities. Mona, it's great to have you with us. Welcome to Trade Talks.
Thanks so much, Jill. Great to be here.
Give us a high-level overview of the survey.
Yeah, absolutely. This survey was conducted in early January, and what we really found is that while 45% of Americans are optimistic about the economy, a almost similar number are more pessimistic, 42%. And what are they concerned about? Well, first and foremost, areas like inflation, interest rates, employment, even supply chains made the list of top areas of concern. And what we also found is from this survey, when investors are concerned about the market, seeing the ongoing volatility in headlines, a lot of times they are motivated or have an impulse to make a buy or sell decision in their portfolios to take some action for better or for worse. Now, what we also found, the good news is that those investors that were able to work with someone like a financial advisor or someone that they trust helps keep them on a more longer term path to meet their longer term financial goals rather than kind of looking at the near term headlines.
How do Americans overall feel about the state of the economy?
Yeah, certainly I think since this survey in January, we've only gotten heightened concern. Of course, we had the onset of the geopolitical crisis in Russia and Ukraine. And what that did was really exacerbate some of the trends that were already ongoing. So higher prices at the gas pump, higher grocery store bills, higher even supply chain issues that have come to the forefront. I think all of these have really put more worry and a little bit more anxiety on the minds of investors. More and more we're hearing about Federal Reserve, central banks raising rates across the globe. And what does that mean for the cost of running a business or the cost of living going forward as well? So anxiety levels are a bit higher. Volatility in the market is also a bit higher.
How important is it to stay steadfast when it comes to financial priorities?
Absolutely. We always say it's better to be in the market than trying to time yourself in and out of the market. Investors historically have not been great at timing a bottom or a top in markets. But what we really look at is longer term trends. And in this case, what we're seeing is the US economy actually, from our perspective and a fundamental perspective, is relatively sound. The consumer came into the year in good shape. We're in the midst of earnings season, which is actually exceeding expectations. And in fact, the labor market is one of the tightest we've seen in quite some time. So not a bad backdrop for the consumer, which is 70% of the US economy. Generally, what we'd say is, think about your long-term financial goals. I think that is the key message that we have. Every investor is unique. You'll have your own risk tolerances, your own goals in what you want to do with your finances over time. But as long as you kind of make a plan and stick with it, even in times of volatility, you'll have the comfort in knowing that your long-term plan is intact.
Mona, what did the survey find out about investing in financial education?
Absolutely. So some of that anxiety that we talked about earlier, those investors that really gave themselves some sort of financial education, whether formally or informally by working with an advisor over time, they tended to have less anxiety about what's going on in the market, perhaps in some ways using volatility as an opportunity to diversify or to add to risk if they felt that they were underweight in certain areas. And so the more you can align yourself either with a financial advisor or a way to get more financial education. Of course, it's Financial Literacy Month in April. It's a great time to kind of take a few steps, whether it's an online course or talk to someone that's been in the markets for years and can explain some of this volatility and how over time we tend to see equities and markets broadly tend to improve as the economy over time has improved. But that financial education will really help alleviate some of the anxiety and nervousness you might be feeling, especially in the last few months.
And finally, why should investors lean on a trusted advisor?
Yeah, absolutely. So not only would an advisor help provide that financial education, a little bit less anxiety and more knowledge will go a long way, but also the financial advisor is really the person that's responsible for putting your plan together. And so in a time like this, you can really rely on someone, and especially someone who's been through the ups and downs of a market cycle. They will help to make sure that you're still on track. If you have deviated from your financial strategy in any way, they'll also help make sure that you return to your long-term kind of goals and strategies in terms of asset allocation and portfolios. And so working with someone really does, especially as we've seen heightened anxiety and heightened uncertainty, does really help alleviate some of that and helps, in some cases, keep investors in the market in a diversified portfolio and making sure they're in line with their long-term financial strategies, but not trying to trade in and out and really trying to make more emotionally driven investment decisions, which we really want to avoid during this period.
All right, Mona, we appreciate the insight. Thanks for joining us on Trade
Thank you
Talks.
so much.
You got it. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.